Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com and tractorzoom, delivering insights. If you're looking for a great place to go track what's going on in the auction market, go to tractorzoom's Iron Comps, and you'll see all the information there that you need to track what's going on as far as pricing and where the market's headed, inventories, those kind of things out there in the auction market. There's about 500 independent auction companies that report to TractorZoom, so take advantage of that, and if you decide to, use Moving Iron at checkout, and you get yourself a nice discount. I am always gracious to have Shawn Hackett on here to talk about what's going on in the market, and a couple things. One is Shawn spends a lot of time in the soft markets, coffee, sugar, orange juice, cotton, those kind of things, as well as on the traditional, corn, soybeans, wheat, cattle, those kind of things. So we're going to spend a little time today talking about the soft markets, but I cannot do this podcast this morning without at least getting Shawn's reaction to the report that came out yesterday. So, Shawn, how you doing today, bud?
I'm doing great, Casey. I always love being on your show, and it's I'm really thankful and grateful you give me this opportunity as well. So,
well, I couldn't do without you, Shawn. So, yesterday, the USDA came out with a very bullish report about ending stocks and what that looks like via the WASDE report that came out. And, there were some winners, and then there's some real big winners. And I think the two biggest winners when I look at what came out of that report were wheat and cotton. And I guess what's your reaction to the report yesterday, and what are your thoughts moving forward here into the fall?
Well, I think when you look at the report, if you just wanted to sum it up, what it's telling everybody is we're going to have to go through another entire growing season in the upcoming cycle with no ending stocks. That at the end of the day, their conclusion is we don't have any buffer stocks for another year, and everything has to go perfectly well. And that is the message that was given yesterday, that despite a lot of conjecture that the U.S. was going to save the day and have these big crops and trend line above trend line, they are disagreeing with that. We've talked about on your show before that we didn't believe that we were going to be nothing. We weren't looking at terrible crops, but we're not going to be looking at these trend line above trend line yields. And for them to move in August on corn, on wheat, on cotton, which they don't normally do, is telling you that they feel really comfortable that when they do their agronomy work starting in September, that they're going to verify that these yields are going to come up somewhat short, and maybe they're going to have to lower the numbers even further. We think they actually have further to go before we're done with it. So it means pins and needles, Casey, all the way into next summer. As you know, we're not anticipating perfect, great weather for the Northern Hemisphere growing season coming up with our forecast. And so if we're even half right about the weather volatility, the chaotic planting season and such that we're expecting to see, that's not going to sit very well with no ending stocks. So we're ragingly, wildly bullish longer term on these markets going into the spring, summer of next year. And so this is a confirming message that, we just didn't get the job done this year. The weather just, the drought cycle was too severe. And And I'm glad to see they actually took a more proactive approach for once, Casey. Usually they don't. They just kick the can, and then somewhere later in the year they come clean. I think maybe last year they looked so bad they're just trying to get a little bit more relevant again this year. But whatever the reason, they did come up with numbers that kind of agree with the work that we do and a lot of things that we've been saying on your show here for quite some time.
Yep.
So
let's talk about cotton. And cotton is last whenever we did this last Wednesday, we started talking about what was going on in the cotton market, and you alluded to the fact the cotton market was so far behind, or the cotton growing cycle was so far behind because of wet, cool weather and yada yada yada, and all these different things that start playing into that. And now we're looking at bulls opening up at the best possible time ever, right during the peak of hurricane season. So, I mean, as you take a look at the cotton market and via the report, and then you start looking at world ending stocks and how that all played into that. That's the first time I'd ever seen a report where on world ending stocks, the estimate and the actual amount were different. Typically if it's supposed to be 10 whatever, then it's 10 and 10. It's never different. And cotton was the one that did have some different numbers there. So, talk about the cotton market, what you see happening there.
Well, the big miss from what was expected was Texas. I mean, Texas was way, way off. I mean, their numbers were way, way off the consensus. And remember, cotton is a hot crop. It likes warm, dry weather. It obviously needs moisture, but I mean, it likes warm and dry. That's what it needs. And it's been cool and wet all year long. And that's not, so that first of all has put the crop way behind its normal maturation cycle. And when you do that, you hit yield and you push off the key development phase further on into the season when weather tends to be more adverse. Like you said, hurricane season coming up, the bolls are going to be wide open later in the season. And so the USDA, I think, started to take a look at where we were maturation-wise and what the crop was looking like, and it started to make some decisions that this is not a crop that's going to produce the kind of yield everyone has been thinking, or at least, and also they have been thinking. So it's one of the biggest misses I can recall. Texas, the dominant cotton growing state, it's one of the biggest misses I can recall from expectations versus USDA report in a very long time. It was not even close to being right in terms of what everyone was thinking. And so once again, that puts this market now pins and needles. You get a hurricane that comes into the south, the deep south, Texas area into September, with a carryout that's already 3 million bales and falling. I mean, fireworks potential here, really, really big. I mean, we were talking about potential for a spike trade all along, but with a recognition that the Texas crop could be so far off from what was expected. Now we're looking at something that could be some pretty crazy upside volatility here with a confirmed storm that could come in and really ruin that key phase for the cotton crop. So, we're pushing ourselves against that 95-cent level, but I think it looks to me like we're heading to $1 a pound here, and potentially quite a bit more if a hurricane really makes its way into Texas or the deep south. It's just a pretty dynamic situation for the cotton market. This was a big surprise.
Yep. Yeah, I was pretty shocked by it myself. So now let's jump over and talk about the other one that you have made you more elusive than anything when we try to record is the coffee situation in Brazil. About every time you and I go to sit down and record a podcast, some freeze comes through Brazil and nips the coffee plants down there a little bit and makes you busier than a dog with two tails. So I guess talk about that coffee market and what you see happening there.
Remember, it's a tree crop. We don't plant it every year. So it's a tree crop. It goes through a cycle. If you plant a tree, you got to wait 3 to 5 years for it to produce something. So you just can't turn the switch on if the price gets good. It takes time. So remember, that's very different than corn and soybeans. We had the worst drought in 100 years for the coffee areas of Brazil this last season. Worst in 100 years, by far. We have arguably one of the worst coffee crops, seen in a long time because of that. That harvest is just finishing up. That's bad enough. The problem with a drought like this is that the vegetative growth, Casey, that is typically during the rainy season, you get a typical growth of the tree limbs. And from that, you get these nodes that form from which the flowers can then develop in the following fall that produce the cherries that produce the coffee. Well, that vegetative growth was off 15 to 20% because of the lack of moisture and the heat from this past season. And the nodes were off 15 to 20%, which means that next year's crop, before the frost even hit, we were already looking at a crop that was likely had 15 to 20% less capacity to produce than normal already. Now, we haven't had a frost in Brazil, a hard frost, in 26 years.
So it wasn't that long ago, is what you're saying?
Yeah, 1994 is the last time we had a hard frost. We've been predicting that this was a year that had a high probability for a frost. We actually put out our podcast in February, went over all the reasons we thought that this was a year that we had a high likelihood of having a frost, given all the conditions from the research that we did. And sure enough, we had a double frost, 2 in a row, if you can believe it. 2 hard frosts in a row in the core coffee areas of Brazil. Now, that doesn't hurt the crop that's being harvested. That hurts the crop that's coming up. So,
okay.
So what happens is that if you have a frost means that you get that you freeze the outer limb of the branches and you freeze those nodes. And if you freeze them, they can't produce a flower, even if you get good moisture. And so it reduces crop potential. We went back and looked at all the hard frost that we've ever had going back to 1950. And we could not find an example where the crop potential didn't fall by at least 30% in the areas that were hit by a hard frost. The areas that were hit by hard frost was about 40 million bags of production. So that means that if we take the 30% production potential down, that means potentially 12 million bags of production was hit by this double frost. We always like to take the conservative route. We're going to go with a number that's 20% down. And the reason we're doing that is because we want to make sure that we always give hard and numbers that we can absolutely count on. And if we're wrong, they're just going to be even bigger. So when we run the numbers between the lack of vegetative growth and frost damage, we come up with crop potential for Arabica, which is really what the New York futures trade is, Arabica coffee, which is your high quality coffee. Robusta coffee, which trades in London, is your lower quality, your Maxwell House coffee. We think it's going to be around 37 to 40 million bags. That's down from 50 to 55, which would have been in a normal year. On top of the crop we just finished harvesting, which was 30 million bags, down from a potential of 50. So when you run the numbers, we're looking at 25 or 30 million less bags produced this past year and this upcoming year than should have been produced. It sets up the biggest coffee shortage potentially ever that we're aware of.
So are you saying there's typically 50 million bags
of Arabica,
and you're saying there's going to be 30 million less, so we're looking at 20 million?
Well, this past year, during a drought, we're going to produce about 30 million bags. Okay. Now remember, Brazil goes through what they call on-season, off-season.
Right.
It's a little cyclical. So they have a bigger crop, a smaller crop. So last year was the off-season crop. It was supposed to be a little bit smaller. It was supposed to be about 45. It came in at 30. Okay, so that's 15 million bags of less bags, and that's pretty much confirmed. We know that occurred.
So they're about 75% of what they normally would produce.
So 50 down to 30. That's something like 40% down, right? So now the on-season crop, which is the one that's coming up, that should produce between 50 and 55, because it's the bigger crop. It's the on-season crop. We don't think we're going to be able to produce more than 37 to 40.
Okay.
And that's the best, and that's if weather is perfect. If we have perfect weather, everything's great, that's the best we can hope for.
Gotcha.
which is another, 10 to 15 million bags.
So you're looking at about 50%, somewhere between 50 to 55% of a normal crop in both those growing cycles is what you're going to have hit the market.
Right. So we're looking at 25 to 30 million bags less production than would have normally been produced if they had normal weather and normal crops. To put that into perspective, the third largest producer of coffee in the world is Colombia. The loss from this past season and the loss we expect from the upcoming season is equal to 2 Colombia crops. So what we've lost is it's actually as if Colombia just decided not to have 2 crops, not to have a crop at all for 2 straight years. Wow. That's how big this number is. And there's no way to turn this supply spigot on quickly. There's just no way to do it. You could plant all kinds of acres next season, gotta wait 3 to 5 years.
Right.
Before it produces anything. So
switch to tea.
Well, what has to happen here is we're going to have to get coffee prices up to a level that tells the marginal buyer of coffee to just drink less or drink tea or just something else.
Monster energy drinks in the morning. That's kind of the way to go.
And like we talked about with grains, no ending stocks.
Mm-hmm.
Every other weather anomaly we've had since 1970, whether it was the black frost of 1975, whether it was the double frost of 1994, whether it was the drought of 1985, we always had massive above ground ending stocks to fill the gap, meaning that the thing went up, but the supply's there. And once those supplies decided it was time to sell, crash and burn, game over, it's all over. Mm-hmm. We don't have any ending stocks. We don't have ending stocks. We don't have that massive above ground stocks to fill this gap. It's not there for the first time. So we've never actually had this kind of a deficit shortfall with no ending stocks. It's never happened before that I'm aware of. So I don't know what that means for prices or how high it needs to go. Only the market and God know that. But I don't believe $1.80 or $1.90 a pound is anywhere near close enough to hurt or ration demand. Just put this into perspective. During the pandemic year, when pretty much the demand for everything got hit, coffee demand was actually up marginally that year. So it's really hard to hurt coffee demand, really, really hard. So the record high coffee price was set in 1977 at $3.50 a pound. We've never exceeded it to this day. I certainly would think with this kind of a supply shortage, the further on we get in, to this growing cycle, the further we start eating away at this, I would have to believe, that price level is going to be tested and potentially exceeded. What's interesting, there's only 2 markets that have not made all-time highs since 2000, sugar market, coffee market. It's the only 2 markets that haven't made an all-time high. Maybe this is the year coffee joins the rest of the crew and makes an all-time high. Whether that's 4, 5, or 6, it depends upon exactly what happens with weather going forward. But I do believe, that this is one of the most, if not the most serious supply-demand disconnect in coffee that I've ever seen in modern day times. I mean, maybe 150 years ago, but we don't have good data to go by. You know what I'm saying? But
right.
But anyway, so that's and by the way, that situation impacted the sugar market, drought, and frost impact. The sugar market's taking off almost at 20 cents a pound now.
Yeah.
So that impacted the orange juice market. Remember, these all three sugar, orange juice, coffee are grown in that central Brazil area where the worst of the drought and the heat was for the entire growing cycle, and where the frost was. So that trifecta, sugar, OJ, coffee, are all being impacted by the same thing, the same weather anomaly, double frost, drought, what's going to happen through the next growing cycle. And all 3 of them are moving in synchronicity right now at different rates at different times, but they're all being impacted by this same weather phenomenon. And so it's really lighting up the soft market right now because of it. It's really lighting it up. So
okay, so excuse me. So let's talk about sugar, because sugar beet harvest is, less early dig is 15, 20 days away here in the Western Panhandle. And in the U.S., it's about 60% of our overall sugar content comes from from sugar beets, but you talked about on previous podcasts, the sugar cane in Brazil, again, hot and dry, and it was devastating frost, those kind of things. Now, sugar cane, if you freeze it, it actually makes sugar content higher, but how many times can you freeze it before you mess it up, type of thing? So there's a couple of situations there. So I guess look at sugar market real quick and kind of give me your overall perspective on that.
Well, you're right. A freeze actually can improve the sugar content in the plant if it's harvested quickly. If you let it go too long, then it actually goes in reverse. The problem is because of the virus down there, because of the lack of workers down there, and because it was a double frost, which means you're not going to be harvesting anything when you're in a frost. They haven't been able to harvest it quickly enough, and so some of the benefit you would get from getting a freeze in the sugarcane area has not. They lost that edge. And because of that, it's now becoming, the frost is actually having more detriment than it's having a benefit because they've not been able to get out in the field and get it done. And so that situation, and remember, that goes on top of the sugar beet frost that took place in Europe earlier in the year, which took the top off the sugar beet crop there, which is another big producer of sugar in the world. So you throw in the U.S. weather problems that we've had, and just, Brazil's the number one producer, number one exporter in the world of sugar. So what happens in Brazil doesn't stay in Brazil, but it impacts all the other markets that feed off of what they do or don't do. And so differentially, everyone is now wondering, what do we have to do, to get our sugar needs met? And so it's a mess. It's a real mess. And so obviously, all three markets, the orange juice market, the sugar market, and the coffee market, are on pins and needles going through the next growing season like the grains are. It just seems like, Casey, almost every market I'm looking at, there's no ending stocks.
Yeah. We
didn't get the job done this year. We're looking at huge shortages coming up. And, and remember, sugar cane is not an annually planted crop either. You plant it, you get 4 cuts out of it, and then you make another decision. So it has a little more stickiness to it. Like in corn, soybeans, wheat, we just start from scratch every year and decide what you want to do. It's not really the case with sugar. You don't. Now don't get me wrong. It doesn't mean the markets never can correct. Sugar prices at 20 cents looks like a pretty good area. The market may falter here for a little while. I mean, there's going to be price levels that the market is going to pause or back off or create some correct. I mean, farmers have to sell still. I mean, they still have to sell. 20 cents a pound is double what it was a year ago. I mean, that's a good price for them. So I don't want anyone to think that there's no downside in these markets. Of course there are. But overall, if I'm a buyer of sugar, if I'm a buyer of orange juice, if I'm a buyer of coffee, I want to be protecting my upside price risks. The greater risks to me going forward over the next 6 to 12 months are upside price risks, not downside price risks. And so if I'm in the physical market, I want to make sure I don't get caught paying 30 cents for sugar or $3.50 for coffee or $2 a gallon for orange juice. I want to make sure I don't get caught doing that. So my advice for those on the buy side of these markets, get your physical, get some physical in house, get some cash bought purchases, do whatever you have to make sure that you can continue to run your operations the way you like to. Because if you get into a true supply pinch, you may not be able to actually get it at any price for a while. The seller just says, there's plenty of coffee, but not for you. That's how it works. So.
Yep. Well, that's a recurring theme that we've heard here for the last 9 months about ending stocks, and it's a worldwide situation. It's not necessarily something just in the U.S. I mean, take a look what's going on in even South America or South Africa. They were talking about the corn crop down there, and there it's having its issues. And not that South Africa is the world's hinging on anything down what happens with South African corn, but the point I'm making is that whether it's the southern tip of Africa or the Black Sea regions of Europe and Asia, there's just a lot of problems right now when you start looking at drought, frost, early freezes, late freezes, those kind of things, and the stuff you've been talking about starting to kind of take place.
Yeah, and I wish I had better news for the weather. I really do. I mean, I don't take great joy at predicting poor weather and poor crops and high food prices. I mean, I don't take great joy in it. My job is to get the forecast right. Whether that I don't take great joy in that, but my job is to tell everyone, what our research is suggesting, and our research is suggesting with the La Nina coming back with a vengeance in a Mordecai phase, with the cold Pacific Ocean, with the cooling Atlantic Ocean, with the ongoing grand solar cycle minimum. It doesn't look good to me for the weather cycle over the next 6 to 12 months. It looks really, really unfavorable. In fact, more volatile and worse. So I don't believe we're going to solve these supply problems in the next growing cycle. I don't see it happening. I think what's going to have to happen is every market has to determine what is the tipping point to where someone says, I'm just going to drink 2 cups of coffee a day versus 4. Mm-hmm. Or, I'm going to drink more tea, or I'm not going to go to Starbucks. I'm going to Starbucks once a week instead of 3 times a week. I mean, I'm just talking out loud, but every market has to decide what is that level that actually cuts demand down until a good weather year comes. And believe me, a good weather year is coming, just not this next crop cycle.
Right.
We're actually fairly optimistic that we're going to have a better go of it the following crop cycle year, where weather's actually going to back off. We're going to see some of these variables improve the chances for better weather, better crops, just not the next crop cycle. And so the message I'm trying to convey is, if you're a farmer, if you're a producer, and you're looking, and remember, if you have a half a crop, you need double the price just to cover your cost. That's the reality. If you have a half a corn crop, mm-hmm. If you could make money at 4 before, you now need 8. Right. And that doesn't make any money, by the way. It just gets you to cover your expenses. I think a lot of people lose sight of that idea, that they say, well, the cost of production of coffee is $1.20 a pound. Well, that's true under normal production. But if you have half a crop, well, you need $2.40.
Right.
For that farmer to cover his cost. He needs $2.40. So at $1.80, he's losing money. And if he's losing money, he ain't going to be putting the fertilizer down that he needs. He's not going to be pruning that tree like he's supposed to. He's not going to be spraying for those bugs like he needs to, because he doesn't have the money to do it, which then exacerbates the cycle, Casey, until you get prices high enough to where they can make some money, and the marginal buyer says, I got to pull back on my consumption of this particular commodity. So that's what it looks like to me. Now, we can argue, when will the market need to set that price to ration demand? Maybe it's the spring for corn, maybe it's the fall for coffee. I mean, that's up to great debate. But I believe between now and next year at this time, every one of these markets will have found that level that rations demand, that allows for us to get through this really ugly cycle and gets to the promised land when the weather improves, when the production improves, and we get our hands to where we actually start building some ending stocks again. The real trick and the real holy grail for the producer is, when the time is right to get out and sell the forward year this coming cycle, meaning we believe we're going to make some pretty good tops in a lot of these markets for a while. You want to be able to sell your corn, 1 to 2 years out at that really, really, whatever it is, $10 corn, $12, whatever it is, you want to be able to sell out a year or two, so that when the prices fall, and your fertilizer prices fall, and your seed prices fall, and your cash price rents fall, because that's what happens when the market goes down. All these inputs go down. You sold the higher price, and you get the benefit of your lowering of your cost of production. That's what we did for our customer producers in 2012 and 2008. We were able to get them 2 years sold when times were better, so they could get the high price and then benefit from the lower input costs. That's what we're really going to be focusing on in this upcoming 12 months, is picking the right time to make that recommendation to our producers. Because if they don't do that, and they ride the corn market from 12 down to 5, and they're selling $5 corn, they're still not going to be making a lot of money. And that's the whole point. The only way you can make a lot of money is you either have to buy your inputs first and then sell the high corn price, or you have to sell the high corn price and then buy your inputs cheaper later. You have to do it at a different time so that you lock in the margin. If not, the market just takes that margin away from you as fast as it gave it to you. You know.
Yep. Yeah, that's a great point. Those are all really good points, because especially that. I mean, you grow 300 bushel corn one year, and that's what you're kind of basing it off of, and you get X dollars for it. If you grow 150 or 200 bushel corn, you've got to have significantly higher price just to make the same margin, or cover your costs, whatever it is. So all good stuff there, Shawn. Folks want to reach out to you, get more information about what you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Interviews with you, with Real Vision, white papers, sample reports, give you a really clear understanding of what we do to see if what we do could be of some value to your listeners.
Yeah, make sure you take advantage of that, guys. Go out and look at those sample reports. Get a hold of Shawn, get on his mailing list. The information that Shawn puts out is well worth your time and well worth your resources to do that. So make sure you check that out. Shawn, thanks for being on the podcast, man.
Thanks, Casey. Always love to be here, and we'll see you next week.
Right on, man. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast, as well as any blog posts I have out there. Go to MovingIronLLC.com, and for the latest editions of the Moving Iron Podcast get posted there as well. Also, the entire library of the Moving Iron Podcast are out there as well. So if you want to go back to, December of 2018 when Shawn reached out to me, and I'm like, who is this tinfoil hat wearing guy from Florida talking to me about corn prices and solar grand solar minimums, those kind of things. Go back and listen to that, and you can see where it all started. So make sure you check that out. Also, the Moving Iron Summit coming up, Nashville, Tennessee, pretty well sold out. Might be an opportunity to get a couple more people in, but for the most part, it's pretty well sold out. So if you'd still like to attend that, send me an email at MovingIronPodcast at MovingIronPodcast.com, and I'll be sure to get back to you with what's available. So with that, I'm Casey Seymour with Shawn Hackett. Let's go with some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com.
Moving iron in the 21st century. Hard-working people